Hello everyone, thanks for coming to the Wealth Club. On this channel, we will be talking about different topics to help you make smart financial decisions. So make sure to subscribe to the channel so that you don't miss any of the information we post here. I'm navpreetk and I am the Financial Security Advisor in Canada. Today we will be talking about a very important topic, how to grow your money and how to do it in a tax efficient way. Well, there are quite a few ways to do that. Today we will be talking about TFSAs. TFSA is also known as tax-free savings account. So simply put, it's a savings account that can hold various types of investments such as mutual funds, segregated funds, and etc. Now, we all have accounts in the banks. So why do we need a TFSA? Well, let's look at that by understanding the inflation, the rate at which your money loses its value with time. Now, if your money you have kept in bank is not growing at a rate equal to or greater than inflation, you end up losing money. So we need TFSA to grow our money at a better rate to avoid that. Another reason for that is that the growth you get on the money is tax-free. Now, let's say you have put $20,000 in your tax-free savings account, and with growth, it became $24,000. Now, the $4,000 that you received is tax-free. Yeah, I can feel that as well. Now, let's see who can open a TFSA. Now, there are just two conditions for you to be eligible. One is that you are 18 years or more in age, and the other is that you are living in Canada. It does not matter if you are a temporary or permanent resident. As long as you are here, you are eligible for it. Now, is there a limit on how much you can deposit? Well, yes. TFSA's limits is decided by a government each year. In 2021, it's $6,000. Now, if you do not use your contribution any year, then it's carried forward to the next year. Let's understand this by an example. Now, if you have contribution limit for 2020 $6,000, but you did not deposit any amount to your TFSA in 2020, these $6,000 will be now added to your contribution window for 2021. Now, because there is a limit, what happens if I over-contribute? Well, yes, you guessed it right. You will have to pay 1% penalty per month until the amount remains over-contributed. For example, if someone has done $1,000 over-contribution to their TFSA account, they will have to pay $10 as penalty per month. So it's important that you know your contribution limits so that you can avoid paying penalties. Now let's see how it is different from RRSP or Registered Retirement Saving Plans. Well, both of these are designed to serve very different purpose, but let's see some basic differences. Now, RRSP deposits are deductible from your taxable income. If you have taxable income of $60,000 and you deposited $10,000 in your RRSP account, your taxable income is now $50,000. But that is not the case with TFSA. TFSA deposits are not deductible from your taxable income. However, any withdrawals that you make from RRSP are considered as taxable income. When you withdraw money, it will be added to your taxable income. However, any withdrawals that you do from your TFSA, they remain tax-free. To open TFSA, you can do it with banks or investment companies like IA, Everest, anywhere. Now, you can choose from a variety of funds to put your money in. As there are many different choices available, it can get very confusing. So, my suggestion is to talk to an advisor. Now, being an advisor myself, I can help you with that decision. My contact information is in the description and you can contact me on that for help. And there will be no charge for that, that's for free. Now, you cannot discuss all about the funds in this video because that is out of the scope of this video. We'll put another video for that. Let's look at two most common types of funds: mutual funds and segregated funds. Now, mutual funds are the ones in which banks will put your money if you go open a TFSA with the banks, and some investment companies do put your money in the segregated funds. Now, the main difference is that the segregated funds offer maturity guarantees on your funds. However, mutual funds offer no such guarantees. Other than that, there are some other differences as well, but we will cover them in a different video. Now, you must be wondering how much growth to expect, right? Well, it all depends on what you chose. And again, you should talk to an advisor while doing so. To take an example, if you choose a good segregated fund, you can get about 6 to 8% growth depending on your investor profile. Now, you must ask, how and when can I withdraw from TFSA? Well, you can do so anytime if you did not lock your TFSA, which I do not suggest you do. Do not lock your TFSA unless you're very sure that you won't need that money for a long time. Well, that's all for today. If you need more information, make sure you reach out to me on this email. And if you like the video, please give it a thumbs up and share it with your friends. Please subscribe to the channel if you're interested in building a strong financial future for your family and for yourself. Once again, thanks for watching. Have a great week.